This is G-Man with the right side of the county. It is May 11th, 2025, and we have a classic falling wedge megaphone structure breakout pattern, followed by an aggressive vertical ascent here, where the price is now riding a parabolic ascending uptrend price support level, and that is accelerating upward through previous fib and resistance supply zones, cutting it right through like a knife through butter here. You have strong bullish continuation through the fib confluence zone between the 618 fib and the 786, and the current push is now targeting the fib 1 price support level resistance at 20,756, with follow through likely if the momentum remains elevated here, pinned in between resistance levels of the 250-day moving average. With the relative strength index printing at the 58 handle, it is beginning to trend upward mid-zone, supporting potential further upside, yet not overbought. You have the histogram rising within the moving average convergence, with momentum remaining strong the post-breakout. With the stochastics oscillator here within the overbought zone, but still bullishly embedded, indicating strength and not exhaustion, which could tilt to the upside, churn upward. I believe the momentum is healthy. It is not overextended, and bulls remain in firm, full-blown control here in the full power of Silicon Valley. And I believe the bearish fade scenario is beginning to wane out, although very possible. You would need to have a break of the 19,600 handle, and any traders and or near-term FOMO traders setting in some stops below the 1960-600 handle, honing in up above to target 2756, and then ultimately the top and or bottom of the ascending concealed hidden uptrend price support level, which initiated the breakdown backtest sell signal, a huge psychological level in which bear traders and or short sellers took out with conviction, and was a violent bear flag continuation pattern since that initial shock of the tariff global flows, shifting in $6 trillion across the globe. Although the bearish case seems slightly aggressive in that nature, this could very well turn it into a divergent high where you have an additional short trade setup breakdown, call it an aggressive, much larger, big breakdown sell signal, only ushering in aggressive short traders and bear traders to hone in on a near-term catalyst crash. With the Nasdaq beginning, in my opinion, to ignite with an AI gold rush and a Fed-induced rate plateau, you could have productivity begin to soar while meeting some of the easing in the financial conditions. And this could very well be the ignition point of a tech-driven earnings rally at the same time as trade deals transpire similar to the 2016-2018 era, and an all-out frenzy-fueled bullish rally to the upside. Just to close up the statement, huge shout out to T2 and Ben for calling out the megaphone pattern breakout, and Ben for calling the 16,500 low. That was a big deal right there. Huge counter trend, powerful rally. And Ben pretty much caught this whole thing here. Started selling into the 200s, which was respectful, and is looking for that short-term short trade setup, which no doubt about it, Ben could nail the trade for the second. One of the best indice traders I know. But again, utilize some of the risk-reward ratios in your favor, and long live the county.